Karan Torani, will these numbers justify the kind of premium or excitement Zomato has commanded? Will it continue, or these numbers are more like an serious shakeout moment where we have to look back and say, okay, this is slowing, that is slowing, everything is slowing?
Hi, good morning. I think this is probably the third consecutive quarter wherein Zomato has not reported any kind of positive surprise. If you look at Zomato 3 quarters ago, they were ahead of their guidance on most parameters, both in terms of top line growth across businesses and in terms of profitability. What has been a spoil spot here is two major things. One is, of course, the food business, the kind of slowdown we have seen, because of the majority of the reasons that the management has pointed out. Second big spoil spot is the quick commerce competitive intensity. With the price wars coming in, with new players coming in, that's clearly been the laggard in terms of why the profitability is not coming quick commerce. So I think, yes, there could be a mild negative reaction on these numbers. But as I said, we have to give it to Zomato for two factors here. One, they are expanding aggressively, even ahead of peers as far as expansion is concerned. They have got a larger market share ahead of peers as well. And despite all of this, their losses are extremely low as compared to peers. So I think that is when you will see some kind of premiumization for Blinkit in the quick commerce segment. And they are not playing for the price war. I think Blinkit has clearly stated in the past and even right now that their focus is on execution, location of dark store, and lower lead time, custom product assortment, these kind of things. So they're not playing the price war, not giving discounting, not gaining market share at the cost of discounting. So I think these are very big positive things, which will work in favor of Blinkit.
All right. Hi, Karan. Good morning. This is Shrishti also joining in. But help us understand what's the outlook coming in on Blinkit, because this time they have reported a lower than expected losses. But how do you see the store addition happening? Do you believe that given such an environment, it may be for peaking right now?
So as far as store addition is concerned, I don't see a peak, at least in the near term. The reason for that is, the non-metro markets have seen good adoption as far as quick commerce is concerned. And that's what Zomato commentary also did point out yesterday. Rather, Blinkit commentary also did mention the fact that smaller cities are doing well. You are seeing adoption of quick commerce over there. So if that continues, I think, we could see strong store addition for the next 3 to 5 years in many other cities, apart from the top 8, 10 cities that they're focused upon. Plus, I think store addition will continue because they are making inroads in markets where they've been weak. Markets like South, where Swiggy is a market leader. Zomato is, Blinkit rather, is aggressively expanding over there. So I think all these things are going to work in their favor. But of course, there will be convergence in the quick commerce growth rates over the near to medium term. The quick commerce growth rate today has been in the range of 120 to 130% on a GOV basis. We believe that that will converge more to a CAGR of 65 to 70% after FY26. And the convergence will be because of two reasons. One, of course, the slower SSG in the existing stores. And second, of course, the store growth at a reasonable base. But yes, there is ample penetration, ample opportunity to add many more stores as far as Blinkit is concerned.
Karan, given this scenario and the numbers that have come out with, that have come for Zomato Eternal right now, what's your pecking order when you talk about this entire quick commerce space, given the fact that you have Swiggy now also that's a listed entity, you also have Zomato, and let's not also forget about DMart, who's also trying to actually push really hard in the segment.
I think in the terms of pecking order, I would still prefer the quick commerce names here because we are seeing rapid adoption of quick commerce. Quick commerce is not only eating market share in terms of multiple FMCG grocery brands, but also within the e-commerce market. So quick commerce currently accounts for 1.5% of any particular brand FMCG sales, right? But if you look at it, it is actually disrupting the e-commerce segment as well. So companies like DMart definitely have got their moat, with DMart ready, but they haven't scaled up over the last 2 years. And we have to wait and watch in terms of how do they kind of rejig their strategy to scale up, because slotted delivery and 10-minute delivery is a very different proposition. And e-commerce players also may find it tough to scale up in this business because of the 10-minute delivery that quick commerce offers. So I think long time to go for traditional companies to really scale up. As far as quick commerce is concerned, we'll maintain our positive stance with Blinkit over an Instamart, or a Zepto. Zepto, of course, is not listed. But two things to monitor here. I think the gap of losses, between Blinkit and other peers should not narrow down to a significant extent, which is extremely large right now. It's extremely large 2 quarters back. And before that also, when Blinkit did touch a break, even other peers were making losses. So one thing to monitor, the losses don't kind of narrow down in terms of gap. And second, of course, is the expansion plans. It is very important for Blinkit to continue to expand, to kind of sustain market share, gain market share in areas where they are not strong. And third, of course, would be Blinkit today in terms of discounting is much lower as compared to peers. And despite that, the losses are significantly lower for them. So I think they have to really focus on the moat, which they are doing right now. And we hope that they continue to focus on these things to drive growth and to drive profitability for the Blinkit business.
Karan, appreciate your time. Thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.